Indonesian assets continue to face pressure after President Prabowo ousted Finance Minister Sri Mulyani Indrawati just days after the country witnessed its worst social unrest in years. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Indonesia's new Finance Minister Purbaya Yudi Sadewa says he will keep Indonesia fiscally healthy, but it's not been enough to calm investors with the rupiah facing a sell-off. We speak with SGMC Capital's Mohit Mirpuri on whether Indrawati's exit changes his long-term bullish view on Indonesia. VinFast Chairwoman Thuy tells us why the Vietnamese company is betting big on India, taking on bigger rivals including Tesla, BYD, and local brands such as Tata and Mahindra. Our top story today, Indonesian assets continue to take a beating after President Prabowo Subianto replaced Sri Mulyani Indrawati as finance minister, risking a loss of confidence among international investors. Bank Indonesia says it's strengthening stabilization measures for the rupiah by intervening in markets as the currency slides. Take a look where we are in terms of the JCI, currently down about 1%. The Indonesian rupiah was down about 1% now, lower by 0.8%. Remember that Indonesian assets have been pretty lackluster this year. In fact, Indonesian stocks up 10% year to date, still underperforming emerging market peers. In terms of the IDR, it is among the weakest currencies in Asia this year, behind just only the Indian rupee. Let's get more with our Indonesia Deputy Bureau Chief Claire Chiao in Jakarta. Claire, market seems to be still digesting this news.
That's right. And the Indonesian assets are taking a strong hit from this cabinet reshuffle. And a lot of it is really because of this fresh wave of uncertainty it's unleashed. We're coming right at the heels of some of the worst protests Indonesia has seen in years. And the message from the government then was that there is no need to panic, the economy is not affected, and fundamentals are intact. And now you have huge changes at the leadership of the Finance Ministry, which has really been at the forefront of managing President Prabowo's economic blueprint. And much of this uncertainty is really because of the central figure of Finance Minister Sri Mulyani Indrawati, who has really championed fiscal prudence. She's a well-known figure to investors. She's been the one who's been able to say that despite these growth problems, we will keep our spending responsible. And that's the kind of messaging that we're not sure the next finance chief will continue. So the handover ceremony is expected sometime this morning, and all eyes will be on what the priorities will be of the next finance chief, Purbaya.
And we talk about the new finance chief, Purbaya. Little is known about him. What do we actually know besides the fact that, he knows economy?
Well, he is a very capable economist, and he's also a technocrat who's led the Deposit Insurance Corporation. He's a known figure to the market, but whether or not he has the same international profile and credibility as Sri Mulyani, that is something he will have to build up. In the few comments he's given over the last 24 hours, he said the president has given him the marching orders of turning around the economy as quickly as possible. We've already seen in the data consumption is soft, manufacturing is shrinking, and this is all before the trade war has really affected Indonesia. And if that still isn't clear, the government definitely took a strong message from the protests. Students, labor groups have said the layoffs are hitting them hard. They're not taking home as much pay. They need higher wages. And that's something that finance chief will need to appease. The question, of course, is how will the government afford all of this? They will need to spend on stimulus measures, on Prabowo's priority programs like free lunches. But tax collections are weak, and anytime they've wanted to raise taxes, it's been met with unrest.
We know that Sri Mulyani helped Indonesia gain, that credit rating that it has right now. What does her exit mean for Indonesia?
It could mean a lot of things in terms of fiscal prudence. What we know is Sri Mulyani has served for 3 presidents and has managed to keep a very strong budgetary line that despite all the spending promises, we will keep the budget deficit below its legal limit of 3% of GDP. All eyes will be on whether or not Finance Chief Purbaya will maintain that same cap. We already have the estimate for 2025 at 2.8%. It's already pretty close to that cap. And if they want to spend more, it would have to push that up higher. For Sri Mulyani, she has always maintained that that kind of prudence is crucial to underpinning Indonesia's credit ratings and Indonesia's growth. Whether or not Prabowo and Purbaya will change that, we will find out today.
Claire, thank you so much for that update. Bloomberg's Indonesia Deputy Bureau Chief Claire Chiao in Jakarta. Let's get perspective from Mohit Mirpuri, Senior Partner at SGMC Capital. It's an asset management firm that invests in Indonesia and other Southeast Asian countries. Also with us, Bloomberg opinion columnist Dan Moss. Dan, let's start with you. It does feel like this is the cost of Prabowo's populist policies, the cost of his $1 billion free meal.
So since Prabowo took office a year ago, he's been intent on remaking the machinery of government. He has centralised power within his office. There is only one star in this administration. There was only room for one. As a matter of practical politics, someone also had to go after the demonstrations. In reality, Sri Mulyani, a highly credible, dynamic civil servant, was a diminished figure. If she had left office with Jokowi in October last year, her reputation would have remained stratospheric. She has been tarnished by her association with Prabowo. She has been forced to sell policies, put a good spin on bad decisions that a younger version of herself would have had enormous difficulty standing behind.
But circumstances are different, but I'll pick up on that slightly later. Mohit, let's bring you into this discussion. We know Sri Mulyani Indrawati was a credibility trade. What does it mean for you now as an investor?
Thank you. I think this is a transition. I still believe it is not a rupture. Mr. Purbaya needs to project competence in order for us to believe and restore confidence for investors globally. I think because he does not have a strong international profile like Sri Mulyani, investors are naturally questioning whether he has the fiscal discipline and credibility to maintain the work done by his predecessor. His early signals are encouraging. He has obviously said no new taxes, a focus on growth, and even did not shy away from the ambitious 8% GDP target that Prabowo has set. So I believe, yes, investors will be cautious and they will monitor what's going to happen in the next kind of couple of 48 hours to see what he says.
Why isn't it an alarm bell that he's talking about 8% growth? You do not get to 8%, 7%, or even 6% growth from where it is right now by not spending even more than it is doing right now.
Yes, I think at the same time, I think he has acknowledged that there has been weak purchasing power. So he needs to fiscally stimulate in order for that to return. In terms of GDP growth of 8%, I think he's also acknowledged that that's at a later stage, 2027. I think the initial targets are still 6%, obviously the near-term target. So I believe investors should know he's not untested. He's obviously highlighted that he's been there in the previous crises. And he's an economist trained abroad. He's a Purdue-trained economist with a senior role in government and markets. So he understands both fiscal discipline and what investors would be looking for.
Dan, are the early signals enough to allay concerns, bearing in mind what's coming up in 2026? We know that military budget is up 30%. We know that energy subsidies will stay. That's enough to, make investors nervous, actually.
I don't think we've had much Has by way of substantive early signals. Brief remarks that our colleagues in Jakarta reported last night. On the one hand, he said, hey, I'm a markets guy. On the other hand, he did endorse this push for faster growth. So I think Munir, has really addressed the central point here. Is this a change of salesperson at the Finance Ministry, or is this a regime shift in underlying policies? There is a contradiction that must be wrestled with. You can't get to this significantly faster level of economic growth, have all these pet projects, including Nusantara, which he inherited from Jokowi, and gut the VAT. How do you do that? There's a circle there that needs to be squared. And while, he may have been part of the economic team for a while, there is nothing quite like the white-hot heat of being a country's finance minister. He won't be part of a team anymore. He'll be the guy. And if he thinks Prabowo won't dispense of him when it becomes convenient, he probably has another thing coming.
And Mohit, the same playbook, the same rules, is it enough to send out the signals? You know what? The rules that we've played in the last few years will remain intact.
I think the finance ministry has already been built into one of the most credible and transparent arms of government by Sri Mulyani. The foundation doesn't disappear with her exit. I think the institution itself is stronger today, and that continuity matters for investors. I believe Purbaya now should step in, talk to his colleagues, and assess where things will go. In terms of, we have to remember, even with BI already cutting rates, I think there is room for further monetary easing, especially if the Fed also cuts rates. So I still believe there are measures to support that growth target. So I think when combined with the fiscal measures, it would have a good growth policy mix.
What's the biggest concern for you, Mohit? There's so much confidence that you're expressing right now.
Of course. Obviously, the one that I'll be watching very closely is the bond yields. I think they are the truest barometer of investor confidence. So far, they have been stable. We expected the rupiah to soften. We expected equity markets to weaken initially. So I think the bond yields are what I would be watching initially. Second, I would, of course, watch for policy clarity from Purbaya. I think the more he communicates clearly on fiscal plans, the more comfortable markets will be. And finally, I still believe the earnings momentum in Indonesia. I think with commodity prices firming up, remember, it's a very resource-rich country. So I still believe earnings will improve next year. And I believe that would obviously boost equity markets.
There are concerns out there about the revival of burden sharing, in which Bank Indonesia will pretty much fork out the bill for the spending that we see by the government. Is this something that worries you?
No, I don't see that a risk in the near term, because debt to GDP is fairly low compared to peers. I think fiscal buffers remain, and the government has reiterated discipline. I mean, Prabowo has said in the past that, in fact, he wants to go towards a surplus. Obviously, I think that's still far away. But remember, 307 trillion rupiah has been cut from the 2025 budget. So I believe, the discipline still remains on the back of their minds.
Dan, the burden sharing scheme was supposed to be a one-off. It's controversial, and here we are talking about the possibility of it being revived.
Well, it has been revived in a subtler form. Under the arrangement which was revealed last week, there will be a sharing of interest costs between the bank and the government for all the bonds the Bank Indonesia has bought, either in the open market when they intervene, or ones held over from the 2020 direct placement. So in 2020, this was pure and utter debt monetization. What we're seeing now is something a little subtler. Sri Mulyani was among the people who jumped up and down in 2020 and said, this is a one-off, this is a one-off, this is a one-off. This is a product of the extraordinary times, which is COVID. And they got a pass for that, in large part because she projected enormous credibility, and Jokowi listened to her. Let's also talk a bit about this 3% of GDP deficit target. It was a product of its time. It preceded her term at the Finance Ministry, it's subsequently become this kind of totem, this line that you dare not cross. She became very closely associated with that. Prabowo, as a candidate, expressed plenty of scepticism about those targets. We'll see what happens now. If the new team were to dispense with those targets, which would also require legislation, they should do so with the utmost care.
Bank Indonesia's independence also in question right now.
Well, burden sharing is a nice euphemism. It has a ring of equity to it. It does raise questions about the bank's independence. It's interesting. Late last year, all the noises from BI were, we're worried about currency stability. And then they pivoted very, very quickly early in the new year. And to be fair to Governor Wajiro, inflation is under control and that allows them to do some things. Sri Mulyani also served as a buffer between successive presidents and the bank. The bank was an institution remade as part of the post-98 settlement. Potentially there's a lot up for grabs here, but we need to hear more from the new guy.
Mohit, given that you're quite optimistic that things will work out in Indonesia, is this a buying opportunity?
Yes, I believe dips are meant to be bought for Indonesia. I think emerging markets will outperform developed markets. I still think valuations are undemanding at about 12 times forward PE. So, yes, I think overall, I believe it should be bought.
What are you buying? What are you interested in? What are you looking at?
I think obviously with the pre-meal program, I think consumer names would obviously be the first beneficiary. Second, I think with the rate cuts, financials should still continue to outperform, although we are watching the NPLs very closely because the micro discontent that I feel is on the youth unemployment. That's where I'm watching. So I do hope we see a bit more support for the jobs for the young people. And that will naturally boost consumer confidence. And also resources, obviously resource companies from renewables to commodities. I think that's something I would be looking at.
Perhaps valuations are low for a reason. It is among the worst performing EM markets. It's lagged its other global peers for a reason, no?
I think this year it's been a process of transition, I would say. I mean, 10% returns are still not so bad in dollar terms year to date, of course. But I believe that with clarity, once the demonstrations are shaken away, once things are more clear, I think investors will jump back in, especially if the Fed starts cutting rates too. I think there is room to move higher.
You talked earlier about how it is the bond yields that you're focused on. It's also about the Indonesian rupiah. It dropped 1% at the get-go. That is a strong signal that we should be reading in terms of what markets are looking at and how it's feeling about the removal of Sri Mulyani.
Sure, and rightly so. I mean, I'm not discounting that. However, BI has sufficient trade surplus, sufficient FX reserves, about 150 billion still, and they can intervene in the market should they be required to do so. And I also believe it's a function of just net foreign selling, which occurred last night as well. The ADRs were down to 2.4%. I think this is a short-term reaction, as expected, even with what happened with the demonstrations. But we can continue to see the rupiah has actually depreciated year over year gradually. So again, I don't think it's that much of a concern for me.
We'll keep our eyes on developments in Indonesia, of course. Mohit Mirpuri, senior partner at SGMC Capital, and Bloomberg opinion columnist Daniel Moss there for us. Still to come, we'll hear from former Japanese Foreign Affairs Minister Kono Taro as contenders emerge to succeed Prime Minister Shigeru Ishiba. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Japanese lawmaker Taro says he's still considering if he wants to join the LDP leadership race after Prime Minister Shigeru Ishiba announced his plan to step down. Speaking with Bloomberg, Kono also told us the Bank of Japan should raise its benchmark rate soon, even as political uncertainty clouds the outlook for economic policy.
We need to fix yen rate. So in order to do that, Bank of Japan need to increase the interest rate. I think that's the core of the problem. But instead of doing that, the Japanese politics has been trying to give out the benefit to the household. It doesn't work, and it just simply increase the government deficit, and that would further speed up the inflation. So what we have been doing is wrong, and I think we need to go back to the core of this problem, which is low interest rate. And the way we are trying to handle and the way the Prime Minister is leaving his office may work against that. So that's what I'm very strongly worried about.
Will you be running for the LDP election?
I'm sleeping on it.
You're still sleeping on it. Is there a risk right now that we could see this revolving door of prime ministers, given, of course, also the weakened position of the LDP?
Yes, LDP lost the majority in both houses. That's why the prime minister is leaving office. And whatever we do, we still need at least one opposition party supporting our budget or the bill. So the new prime minister will be in a very weak position unless at least one opposition party decided to join the coalition. Then we could secure the majority, and then we can do more stable policies.
We have seen these ICE raids when it comes to Hyundai, LG factories as well. I want to bring the conversation into trade negotiations, into investments into the United States. Do you see those as problematic when Japan also has an agreement with the U.S. to invest hundreds of billions of dollars when you don't have clarity over the investment parameters and how freely you can operate in that country?
Well, this tariff issue, I mean, it came down from 25 to 15, so people feel this has been solved, but it's actually going up from 2 point something to 15%. So this tariff issue is wrong to begin with. And on top of that, we don't exactly know what's going to happen. There are some talks about Japan investing in Alaskan gas and oil, but I'm not sure if that is economically feasible. So there are a lot of things still not clear.
Could this uncertainty threaten the Japan-U.S. alliance?
It could. That's what I'm worried about. The situation in East Asia, economically or in terms of security, it's unstable. And U.S.-Japan alliance supposed to be the cornerstone of the stability in East Asia. This U.S.-Japan security treaty is public goods for the region, not just for two countries.
Japan's Liberal Democratic Party lawmaker Taro speaking with the Asia Trade co-anchor Sherry An. Coming up, we speak with VinFast's chairwoman as Vietnam's largest car maker bets big on India. That interview coming up next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. India's EV market is quickly getting more crowded, with VinFast the latest to jump in. Vietnam's biggest automaker is debuting its cars only weeks after Tesla's entry, and with significant introductory discount pricing to establish a foothold among Indian consumers. Let's get more on India's burgeoning market for electric cars with our India auto reporter Alicia Sachdev. Alicia, it does seem like a brave move by VinFast. I mean, its cars are priced far below Tesla in India. What does that tell us about VinFast's strategy?
Good morning, Haz. Well, for starters, it shows us that VinFast wants to be seen as a mass market player and not chase the premium positioning that a Tesla has in India, which makes it look like a luxury player and be priced out of reach for most Indian buyers. So the strategy is clearly to be where the heart of the Indian market is and really address its growing middle segment where there is a lot of demand for affordable, smaller EVs, and VinFast does have those. And it has told reporters in India that it is looking to bring them in next year as well. So clearly, getting in early in India when the Tesla and BYD are still grappling with high import duties with locally made cars will help it build early brand presence and also compete with the local players here, which kind of can make it also eventually a springboard into other overseas markets in the region.
We talk about how it is a highly competitive market. What do you think is the strategy then? How competitive exactly is it?
Well, like I said, the Indian market is really concentrated around the $25,000 EV price point currently. The edge that VinFast will have really is the local factory that it has invested or is going to invest about $500 million building in the south of India. So that will enable it to price far more competitively and really go, and take the Indian manufacturers head on. With that, it's also thrown in a bunch of goodies. It's promising that it will offer 3 years of free charging to its first set of Indian customers. That, of course, will be offered through the V-Green arm, which is the charging network that VinFast has. Currently, though, it does not have any chargers in India, but it's promising it will build about 15,000 of those over the next 1 year or so. Then it's also trying to build a very robust network of local car dealers in India. So really seeing that brand, all around itself, the ecosystem bet is really what VinFast is going after here, and therefore hope that it does better than BYD or Tesla, which are still kind of looked upon as premium players in the market.
And not surprising, Alicia, it is burning through cash as it goes through this Asia expansion spree. Are there financial concerns?
Absolutely. We saw that VinFast lost about $800 million in the second quarter. The stock price has been in a decline this year. The share price itself is hovering around $3 at present, down from the highs of about over $90 that it briefly touched after listing. So while the parent Vingroup does have deep pockets, it's the largest conglomerate in Vietnam. All of the VinFast clearly doesn't want to Vingroup does not want to stop at just cars in India. It wants to do way more. It's already talking about building electric buses, getting into luxury resorts, hospitals, even launch a taxi aggregator service through GSM. All of these are ventures which are capital intensive and will need the parent to put in a lot of cash to actually get into. So the sustainability of all of these is something which has been concerning investors, and as it's now looking to really double down on its Asia push with markets like India, Philippines and Indonesia, that sustainability is really something that VinFast will have to watch for and explain how it plans to fund all of this expansion.
Alicia, thank you so much for that. India Auto reporter Alicia Sachdev. Let's get insights on VinFast's India EV strategy with its chairwoman, Thuy. Madam Thuy, good to have you with us. We've been talking about your big factory in India that's just been launched. Talk to us about why there's so much optimism when your global rivals, the likes of Tesla, are just happy to play from the sidelines.
We're very happy to open the factory in India and start launching the vehicles and announcing the price a few days ago in India. At the end of the day, I think most people agree that the future is EVs and we're going to be driving EVs. So we still believe in it. Our mission is still to make EVs affordable to everyone. India with big market, 1.5 billion people, obviously is a very promising market for us. And that's why we opened the factory. That's why we brought our vehicles. That's why we brought the whole ecosystem to India.
And that's precisely why your rivals are also there. What's the strategy, given that this is such a competitive market?
So we launched the VF6 and VF7 first to test the market. So far, the reaction has been quite positive. India is not easy market, but I think our competitive edge is quite different from others. We bring in the whole ecosystem, not just like EVs, but e-scooter, electric buses. We build a factory. We bring in the whole green ecosystem. It's very similar to how we did it in Vietnam, right? And how we got to the number one position in Vietnam. So we're starting with the green taxi GSM to get people familiar with our vehicles, to get in the back seat, to get comfortable with our vehicles. And we bring in V-Green, the charging station network, to allow people to charge freely, and just gradually to bring people in our ecosystem. So the competitive advantage is the ecosystem, not just VinFast, the green ecosystem, but also the Vingroup ecosystem as well.
But you're not stopping at EVs. You're mulling other plans, going to resorts, hospitals, smart cities even. Give us a sense of why India is such a strategic component for your future.
Well, I think we're studying other projects and how we can bring the whole Vingroup ecosystem into India. As you know, that in Vietnam we develop like mega cities. We build school, hospital, shopping malls, hospitality. So we're not fully committed yet, but we're studying in India to bring similar ecosystem to India. But what we have committed so far is the EVs, the factory, and the taxi, the green taxi, as well as the charging stations.
And what are your, I guess, fundraising plans to fund all the projects that you have in mind?
I think one of the unique feature of VinFast is we have strong support from our parents' company, Vingroup, and especially our chairman, Pham Nhật Phượng, and that continues. You've seen it over the years, and that commitment will continue to be there with the growing businesses in other part of Vingroup. And the growing economy in Vietnam. We believe that we have sufficient support from the founders. On top of that, we also constantly looking for other ways to fund the business at reasonable price though, and I think in terms of on equity, so we're still looking to bring in the equity investor at the price that is acceptable to us. But on the credit side, we started closing some transactions in India and in other part for VinFast as well. So as VinFast continue growing, we continue growing our credit profile, and we started having more and more investors from in different part of the capital structure of VinFast.
In our conversation with your Asia CEO, we're told about early financing agreements with banks in India. Could you shed some light on that in terms of the amount, perhaps, for a start?
Yeah, so I think we're pretty much done with the first, about $200 million transaction. I think we're going to make the announcement pretty soon, but also there are other transactions that we're working on in India as well that we can announce at the right time. Same thing with other markets. So like I said before, as VinFast continue growing, we continue bringing in more and more investors in the capital structure of VinFast.
The other market in focus for investors, Madam Thuy, is the U.S. Can you provide an update on your operations there?
We we completed at the end of June. We completed the transaction we completed the transition from direct to consumer to the dealership model. So we opened the first dealership in California in just a couple of weeks ago in August, and then we can between now and end of the year we're going to open more showroom in California. We continue with the plan for the factory in North Carolina to be open in 2028. I think, the tariff situation kind of, had some uncertainty. So but now that I think the tariffs dust is started settling. So I think we can start, going back to the planning and pushing forward with the plan. The dealers. We have signed about over 30 dealership agreement, and we have more than 20 operational dealers right now in various states in the U.S. I think the numbers started picking up. So month over month, the numbers started picking up nicely. We believe that U.S. It's not as fast as we had wanted, but it's also moving nicely and stably.
You talked about tariff clarity, but some say perhaps that U.S. tariffs will crush the company because the company would have to absorb additional costs. How do you respond to that?
Well, I think the whole industry is facing the same situation, right? With automotive, the tariff on automotive and automotive parts. So I think because our volume in the U.S. is still relatively small, and because we intentionally scale it down this year after hearing about the tariff. So I think the impact on VinFast won't be large this year, and we already brought in enough vehicles for the year before the tariff became effective. I think what we are planning is for next year and the years to come, and with the factory and everything else. But I think for this year we good.
Are you finding it challenging to recruit and hire workers, and are there concerns about possible ICE raids for VinFast?
You're talking about the Hyundai factory last week, right?
Yes.
We have not hired any workers for the factory in the U.S. yet, and we understand that the situation and understand the immigration and the situation in the U.S. In any country, in Vietnam or other country, we're always in compliance with the local regulations. So we do what it takes to be in compliance.
Madam Thuy, I just want to take a look at the latest numbers. In terms of Q2, you reported a rise of 92% in revenue year on year, but you still saw considerable losses. Could you shed some light? What are the reasons behind these huge losses, and what's being done to overcome them?
So I think I've been saying that we're heading to profitability, and we're still on track toward break even and profitability, but that comes with volumes and optimized costs, and we've been working relentlessly to basically increase the volume. This year is like we target at least 200,000 vehicles delivery, so that basically kind of get us to near closer to the break even, and then we continue improving on the cost. So we're getting very soon. We started getting our vehicles onto the new platform, and that would be that would bring our cost down significantly. So in the next quarters, you're going to see the cost coming down, and you see that as well, that the gross margin started going up, and we're getting better and better quarter, every quarter.
Is the momentum enough for you to break even at the end of next year, as targeted?
We're still targeting that, but there are, a lot of variables. We are pushing in certain markets more than before. So I think we will relook at the numbers at the end of the year and kind of put out an, guidance, basically. But I think for now, at least for 2025, everything is on track. We're doing exactly what we said we're going to do, and we're on track toward profitability, break-even profitability, and our gross margin. Taking out all the one-off expenses, still tracking toward the positive territory.
Madam Thuy, thank you so much for your time today. Great perspective. Latito Thuy, Chairman of VinFast, Chairwoman of VinFast. And some headlines to tell you about from Indonesia, Jakarta in particular, where the handover ceremony is underway for the new Finance Minister, Purbaya. The new Finance Minister speaking at the transition ceremony, saying that he sees challenges in geopolitics, government programs as well, that the fiscal to be the tool. Fiscal is to be the tool for stability, growth, as well as welfare. Purbaya saying that climate change will affect Indonesia's key sectors. As you may already know, we've seen a change of finance minister in Indonesia that happened in a surprise move yesterday. Purbaya taking over the post from Sri Mulyani Indrawati. Still to come, France on the hunt for yet another premier after Prime Minister Francois Bayrou was ousted in a no-confidence vote. Details next. Keep it here with us. This is Bloomberg.
Parce que, mesdames et messieurs les députés,
ladies and gentlemen of the Assembly, you have the power to overturn the government, but you do not have the power to erase reality. The expenses will continue to increase even more, and the enormity of the debt, which is already unbearable, will get heavier and heavier and more expensive.
French Prime Minister Francois Bayrou speaking after he lost a confidence vote in Parliament. The outcome forcing a third change in government in just over a year and reviving uncertainty over how the country can tackle its mounting debt burden. French President Emmanuel Macron is now set to appoint a new Prime Minister within days. For more on the political turmoil in France, let's bring in Rosalind Matheson in London. Ros, what now?
We now need to wait and see what Emmanuel Macron does. He's likely to appoint a new premier within days, but who does he go for? Does he go to the left? Does he go to the right? Does he try with the centre again? Does he try with a technocrat? We've already got, some of the left leaders coming out and saying they're happy to be considered. Immediately you have voices on the right saying we're not going to be in government with you if so. And so it's very, very complicated. I mean, one time he took 2 months to choose his premier. He obviously doesn't have that much time because we are expecting to get into a period of union strikes, unrest potentially in France, and he'll want someone in place to be dealing with all of that because technically the Prime Minister deals with domestic matters. That's kind of the division of power in France, and so he'll want someone in place to be leading that, but his options either way, again, are limited. Does he go with someone who's currently a bit outside of the political sphere, someone who perhaps was in politics before decades earlier but has risen above some of the party politics that we're seeing now? Again, all the choices come with baggage or challenges, and the reality is, given what we saw in Parliament yesterday, the extent of the defeat from the French Premier, the number of votes by which he lost and is now going to resign likely today, that this Parliament is incredibly fractured. So is the solution simply to push towards a new election at some point and see if that can crack something open?
It is a rotating door, isn't it? I mean, it is the third government in, just over a year, and that budget needs to get passed. What are the chances of that happening?
Well, incredibly difficult. You heard Bayrou yesterday saying, French is essentially drowning in debt, according to him, debt going up by 5,000 euros a second. That's the kind of the metric that he likes to do. I mean, markets are pretty sanguine at the moment. We are seeing, of course, that premium for French debt over German bonds, for example, markets watching that. But the sense is the debt is high, but manageable for now. It's going to rise, and that bill will come due down the the road. So there's a little bit of window here for the government to get its act together and to find some kind of budget they can get through. But everywhere, again, they turn is difficult. Do they raise taxes on the wealthy? Do the wealthy then leave France? They can't really tax other people further than they already are. But equally, they have to find money from somewhere.
And people, workers are planning protests on the 10th and the 18th of September. Ross, you got to wonder whether they actually want a new political path forward. What's the sense on the ground?
Well, we saw very reminiscent of the 2018 Yellow Vest protests that went on for years. They started over one thing, which was fuel. They morphed into a very well amorphous protest across the country on a whole lot of different things, but basically just a long-running sense of discontent with the economy, with their lives, with their jobs, with their outlooks. And that becomes very, very difficult to tackle when it's a complex soup of problems that people are concerned about. And you can see that right now this budget is attempting to address all of those issues at once and failing potentially to do so. So do we see strikes start over one thing and morph again into something much bigger?
Ross, thank you so much for that. Bloomberg's chief Asia correspondent, Rosalind Matheson, out of London there. We're taking you to Jakarta, live pictures at the Indonesian Finance Ministry's handover ceremony. The new Finance Minister Purbaya saying that the fiscal will be the tool for stability, for growth, for the welfare of the people. He talks about how he sees challenges in geopolitics and government programs, that he wants to maintain fiscal discipline to ensure a healthy budget. Remember that fiscal discipline is key for investors. Former Finance Minister Sri Mulyani has maintained a budget deficit of 3%, and investors will see if that can be maintained by the new Finance Minister Purbaya. He says that fiscal discipline to ensure a healthy budget, perhaps that is a signal that he is willing to go the same way. Now, before we go, here's a look at our show tomorrow. We'll speak with Advantech's Linda Tsai live from Semicon Taiwan in Taipei on their work in AI as well as intelligent systems. Plus, Mitsubishi Power President and CEO Takao Tsukui will be joining us to talk about global energy demand. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.